Good afternoon everyone and welcome to the Morrows Monthly update for May. For the third year in a row now, May has been a negative equity month for the Aussie market. Speculation that the US Central Bank would start to taper back its stimulus program, coupled with generally weaker than expected economic data, weighed on sentiment during the month. The Australian market was one of the worst performing equity markets, falling by just under 5% for the month. Japan was also down around 3%. The US equity market and European markets were up around 2% each, and China was also up strongly by around 6%. Bond yields across the board rose during the month as discussions around central bank stimulus withdrawals took hold. The one exception to this was in Greece, where oddly enough bond yields did decline. Commodities weakened during the month as we saw appreciation of the US dollar. Gold's decline continued, falling down around 5%. Iron ore prices also fell around 10% for the month, taking them back to lows not seen since October 2012. Oil prices were relatively flat and most other industrial commodities finished lower for the month. The Aussie dollar experienced sharp declines for the month, primarily due to a combination of factors being the stimulus discussions around the US Central Bank, weaker than expected data out of China, and also the RBA's rate cut in May. US economic data was mixed during the month. Manufacturing activity and industrial production came in lower than expected. However, we did see consumer confidence rebound sharply and also a continued strengthening of the US housing market. Data across Europe remains weak, with retail sales and first quarter GDP growth both coming in lower than expected. We've also seen weak manufacturing activity and consumer confidence from the region. In China, data was mainly negative, with industrial production and manufacturing activity missing expectations, and inflation came in slightly higher than anticipated. Retail trade data and retail sales were relatively strong. In Australia, we saw a sharp decline in business and consumer confidence, primarily on the back of a poorly received May budget. On the positive note, employment growth was relatively strong, which did result in the unemployment rate falling to 5.5%. In its June meeting, the RBA left rates on hold, and there is an expectation that further rate cuts may come. Recent events have shown that an important factor for the markets has been the debate over whether central banks should start to taper back their stimulus. Market direction is likely to be driven by this outcome, and volatility could remain heightened while this issue remains in the headlines. During May, our downside risk protection strategies worked very well, and given the current market uncertainty, we're comfortable retaining our current portfolio positioning and our underlying investment strategies. We thank you for your time and we look forward to talking to you again next month.